You're tuned in to Agriculture Today, and we start our Friday show with a grain market update. And this week we're joined by K-State grain economist Dan O'Brien. Dan, thanks for joining us today.
Thank you, Shelby.
Dan, starting off our conversation by looking at where we are right now in the market and what you might be thinking we'll be seeing for prices.
I think the overall take on the part of most Kansas state of Kansas ag producers, K-State alumni, KU alumni, whoever they be, is probably just moderate, probably disappointed here in early April that grain prices aren't higher, both futures, well, it's futures first and then cash following them. And just probably if they have old crop grain, they look at May corn futures at 435.5, November bean futures 1180, and May now that's pre-harvest. Hard red would get 577, and their reference of prices that they deemed to be desirable were $1 or $2 higher than that at least in the last 12 months. So we're sitting at those levels. The new crop bids are again for D's corn a little bit higher, 473, so it's 470, 475, something like that. November beans actually 1183, so 1180, 1185, and July 573 for hard red winter wheat, again 570, 575, something like that. So so no doubt they are looking towards looking forward to hopefully for higher prices, especially if they have old crop grain that they're storing yet. And it is April the 5th, April the 5th, thereabouts. And we haven't had any reports of planting mishaps happening right now. There are weather forecasts out there that hold out concern about what could happen as we go into the future. We hear reports of South America. Again, another country yesterday came in with another report. Another in-country agency, I believe it was a government agency, came in and said they've lopped off another 2 million metric tons on the size of the corn crop. But so far, those USDA figures have been only, I guess, marginal in their response to that. They haven't. They're on the way towards lower crops in South America, which we saw that for corn and for soybeans. They'd be all at once. Well, let's shake the market up as it is. We're just sort of slowly working our way lower, and without exciting the market. So you have a situation, at least on the supply side of these markets, that hasn't brought about any concern. On the demand side, you have some ups and downs. On the export side, we're watching ethanol usage for corn, watching soybean crush. Both those aren't doing too bad. So I think we're to try to answer that question as to what the viewpoint of farmers are. They're focused more on the possibilities, more on the risks that could come, the seasonality ahead of us. The traders in the market at this time are more focused on the data set that's right in front of them, and at this time that's not really valuing future risk. But eventually, now it's April 5th. It'll be May the 5th, May the 10th, prime corn planting, May the 1st, in about 3 or 4 weeks, and we'll be going strong even ahead of that. Then we'll look into the soybean side and be more prone yet to have to be responsive to any weather risks. The markets are assuming normal conditions, and those normal conditions bring about moderate to large size crops. Even that respective plantings report last week that showed a bit lower corn, a bit higher soybeans than at least a bit lower corn, moderate soybeans, really didn't shake the market up. So I guess we're sort of in a sideways pattern at this time, waiting for some type of news to shake the narrative of normal conditions going forward. And so I guess I would still, well, in these situations, I guess I would still counsel people that we have have almost all of the risk in the market on the crop production side, all in front of us. And that starts to come into play in latter April, May, especially June. And then if we have normal conditions through that time frame, then for corn, for soybeans, et cetera, then we start to tail off. But I personally think it's too soon to just assume those normal conditions will come without a hitch, and that will start that slow roll down into fall harvest for these crops, or for wheat to move. Well, wheat harvest for hard red, soft red be happening here in late June, July, et cetera. We'll see what that brings about, but so far there aren't any supply shock issues affecting this market, and as a result, we're at the futures price levels that we're at.
Continuing our conversation now, Dan, and looking at what cash prices are.
Yeah, Shelby, you and I watch pretty closely the Kansas cash markets, and noteworthy that the top cash price in the state continues to be in the Garden City area at 455, but Topeka, Hutchinson, both at 445, just 10 cents behind it. And those aren't the main market centers. The Garden City is. Salina, 434, Colby, 441, 436 in Columbus. New crop bids, again, the best new crop bid also is in that Garden City area at 488, 15 over, but everything else ranging from about 15 to 35 cents under in these areas. So it would seem to me that unless we start to have some I guess combination of market factors in the coming months that really start to worry the market, how will we come off of these lows? So we're pretty dependent on that risk right now to emerge if it's going to. Grain sorghum still same picture, pretty strong cash prices. Is interesting in the Hutchinson area. You have still corn cash price 445, and the spot sorghum price 475, still 30 over. Now and when you look at that's one or two bids at major grain terminals, the places that are really exporting. But the new crop bids, especially let's take that Hutchinson bid. Still, you have corn at 458 relative to D's corn futures 15 under, 443 for grain sorghum, 30 under. So whatever's happening on the front end for sorghum, and it's mainly exports to China. The market hasn't bid new crop expectations into that continuing, at least as of yet. And for soybeans, again, cash prices all ranging from about, well, on the low 1060 and the highest price in the Colby area. The next lowest price $11 at Garden City, and then 1120, 1140, the high of 1150 in Hutchinson. New crop bids varying in about the same way. Again, the strongest bid in Hutchinson at 1143, lowest in the Northwest Kansas at 1084, and that's the high end of those bids. And for wheat, it's probably for wheat producers, we're hoping for great yields right now because the prices are just so. The prices, cash prices are at again, the highest cash prices would be about 558 in Salina, Topeka 557, and Hutchinson, all pretty close. You're still above 5 elsewhere, but 508 on the low, Northwest Kansas, and Southwest 528, 532 in Southeast. So it's even though exports aren't much in terms of the pace, still that the areas of the state that had the export potential are still leading the way. And new crop bids, pretty similar situation in terms of where the prices are, just a little bit lower. We've been watching, I've been watching the relative price of wheat versus corn, new crop bids in the Garden City area, because again, if wheat prices get low enough that we can feed it, it's going to show up there. That's where cattle mainly are. And that ratio is at 1.07, and 1.05, 1.06 is kind of the, as a percent, 105%, 106% is kind of the break even that we've been looking at over time to start to really make wheat feeding look attractive. And So wheat prices, as they struggled along, have dropped relative to corn, to the place where we're just on the cusp of having wheat feeding being affordable. And so when does that happen? Well, for some cattle feeder that's tight on supplies of corn, maybe coming into June, July, and you go into the corn market and bid up what could be a higher corn market then, or do you try to supplement, again, adjust your ration, risk affecting the cattle, but adjust your ration to bring in some wheat that's a lot cheaper. So I don't know if that time is here yet, but if that same price ratio hangs around until we get off into June and July, then yeah, you're probably in a place where you might be feeding some wheat in Southwest Kansas.
And Dan, as we continue looking forward, what are you really seeing for things in the grain market?
I think it's a weather deal. And again, you look at the amount of moisture we do or don't have. Again, right now, there's not much standing in the way as we sit today in terms of corn being planted. You look at the US Drought Monitor, really pretty dry, and most all of Iowa. The worst of it, again, an area from say East Central up into Northeast Iowa. But then Missouri, pretty dry, eastern Nebraska, a good chunk of Kansas, unfortunately, in the eastern 2/3 dry. But when you look at soil moisture numbers, that dryness extends into almost all of Missouri. It includes the areas I just talked about, plus southern Illinois and parts of southern Indiana too. So, not an issue right now because we're getting the crops in, but looks like we will be getting crops in unless weather would come in and slow us down for a bit. But the long-term composite drought indicator shows dry all over the Corn Belt. As dry, it's a historic dryness, so we'll have to have moisture. But again, you're talking about the future. Again, Chip Redmond in our shop could talk about that. Is it a coin flip that we get rains or not, or is it a higher probability than that? And Chip would say, well, probably it's a higher probability than that. And that's the way the market is thinking. The rains will come, we'll get a good crop. So we're not gonna let all the naysayers and the hand-wringing grain market economists for these universities talk us into anything else until it actually shows up. So you got that, and still dry conditions in South America, the major production areas, still has to be dealt with. Too wet elsewhere in parts of Argentina. Again, we've talked about the importance of the Black Sea region starting to get some dryness showing up in some of those areas. I did note there's a news article here came out yesterday that Russia putting up more curbs, more limitations on its exports. And I always wonder, is that an effort to raise the price, or is that because they're worried about their production? But anyway, whatever it is, they're curbing some of their exports, and that's probably a price supporting move. And it's just, what's the reason? Is it because they don't have the grain, or is it because they're trying to affect the price? That'd be my question.
Dan, I appreciate you once again joining us and giving us our grain market update.
Thank you very much, Shelby. I appreciate it.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now on Agriculture Today, but we'll be back with more ahead.